Yo, what's up you guys? Welcome back to another video, and in today's video we're going to do the usual weekly market breakdown. Today is a public holiday in the US, all over the world, as it is New Year. So happy New Year from me to you all over the world, wherever you are. Now hope all of your dreams and goals are going to be fulfilled this year, if not last year. But make some new friends, hopefully change the people that you follow on Instagram to surround yourself with people. Now, hope you guys enjoyed your New Year. Unfortunately for me, I was at home. I couldn't go anywhere. Drinking some lemon water, and then also got some medication over here because my still recovering from the flus of being indoors for most of the time as well. Now, apart from that, we are going to take a look at the normal pairs that we normally take a look at on a week by week basis. And if you're on New Year, please go through the educational content to make sure that you understand things such as fundamental sentiment. I've done a lot of videos on that so that you don't get confused. If you do, consider subscribing so that you can understand what it is that I'm talking about when I do talk about this information. Now, we are going to jump straight into some things that we need to talk about. One of the highlights for last year was interest rates, which is what caused the dollar index to drive all the way. In March, the Feds announced their first interest rate decision, which was okay. This is May. That was May, February, April, March. It was at March there, somewhere there. No, I was right. How did I see May? So it was around this period over here that the Feds were deciding. Let me close that. So it was around this period when the Feds was like thinking, should we hike interest rates? Should we not? What do you think we should do? Should we hike the interest rates? Should we not? Then the Feds introduced a 0.25 basis point interest rate hike. And from 0.25, we're now sitting at 4.25% in interest from zero. Now, this is what drove the price of the dollar index all the way to the moon. Now, the easiest way to interpret this, and you guys, one thing I just want to point out very quickly. The thing is, on the channel, I'm trying to translate the information very easily so that you guys don't get confused with it. It's not that I'm thinking that you guys are not smart maybe or anything like that, but it's just that I've gone through the complicated way, and this is the simplified way of to understand it. So my way or my method of explaining will always be the simplified method, and I'm not going to give you a whole lot of nonsense that you don't need to understand, like 1.0, 2.0, 3.0, 4.0. Like, there's a lot of people that are just talking a lot of stuff that you don't need. So I'm not going to go through all of the stuff that is not required. I basically focus on things that you need to know in order to make a better trading decision. Now, the Fed started hiking interest rates here, 0.25 up until December. We're now sitting at 4.25 or 4.5 interest rate at the moment. And basically, this trend over here kept continuing all the way up until November. What happened was the price was the reason why the Feds hiked the interest rates was because of high inflation, which is the high CPI. Because the inflation started increasing, the Feds had to use interest rates to cool down inflation. Now, basically what we saw over here happening when we started seeing this move to the downside is we basically saw what's known as the inflation cool down, or the market cooling down. Okay, some people say general breakout. Yeah, it's fine. So what we saw here was we saw that inflation, after the Feds hiked interest rates since March, we saw that inflation started to cool down, right? And the market started shifting the momentum to the other side. Now, I am hoping that we could potentially see the market give up everything that it took last year, which is a correction, which would be a correction. Sorry, which would be a correction somewhere here. Sorry, I do expect a deeper correction until there. That would be March. Yeah, that would be in the week of March. So I do expect a weaker dollar because why? I do expect inflation to cool down more as we go into the new year. Now, this week is filled with the PMI. The FOMC is going to come out again and they're going to discuss the economic situation, what their plans are, which is going to be key for us to be looking at. And then we got the one thing that people sell courses on, which is the NFP. Some people call it the NFP movers, like the NFP strategy. So we know that. But I don't expect a deeper correction on the dollar index, but I cannot expect that while the dollar is still trading in bullish territory, the market's still trading above support. Now, we're going to look at two ways in how we're going to approach this, purely based off the FOMC meeting minutes on Wednesday and the unemployment rate coming through as well. Now, let's jump straight into it. Now, the PMI and the unemployment, we're probably going to see some higher unemployment rate, potentially, but we have to see again on that. Now, the best way, I'm going to jump straight into the daily time frame because I don't have sufficient information from a technical perspective, from a fundamental perspective. So I'll tell you what I anticipate the market to do, right? We're going to go onto a line chart. The line chart basically just allows us to pinpoint exactly where the structural levels are in the market. Now, if you drop down on the daily time frame, now, firstly, we know that the dollar index is holding on to life support. Get it? Like life support. Well, if you didn't get it, it's fine. Like just don't call me a red flag for making jokes that you couldn't catch. So the Nasdaq's currently sitting at support. It's very strong support because it's not only daily support, but it's monthly support as well. If we are going to look for a sorting opportunity on this, we need to wait for a clear break below this level. Then on the retest, definitely expect that continuation to the downside. That is the one way to approach this. Alternatively, if the dollar index does go higher, this will also give us another opportunity to get into the market, to go and get to that level also. But obviously, if the NFP data and the Feds come through with a good plan that is going to save the dollar, then we could expect the dollar index to increase in value, where we could potentially see something like this take place as well. So again, very important to just, kind of monitor what the Feds are going to say on Wednesday. That will help us make a better trading decision. Now, I will keep you guys up to date as time goes by. But if you spot the breakout, be sure to get into the trade there as well. Now, let's jump over to the Nasdaq. Now, the Nasdaq, if you remember the video I made on the Nasdaq about that buy that I said, yeah, you can buy. So basically with the Nasdaq, I do expect the Nasdaq to actually go and complete this correction. So if you take the Fibonacci from the high to the low, I do expect a deeper correction from the Nasdaq to go and at least test that level over there that acted as a support. The market broke below support. All of that support is now acting as a level of resistance. So I do expect the Nasdaq to continue this move to the upside as the Nasdaq is currently also just went into support. However, we also have the Dow Jones. Now the Dow Jones also not moving much, as you can see, also moving sideways. However, as you know, as a scalper, you could potentially go there. However, I do also see the Dow Jones potentially completing this W formation that we see from a daily perspective. So I would say, based off where I am now, if you are looking to go long on the dollar, sorry, if you're looking to go long on the Dow Jones, I would wait for clear break above that level of resistance. That would then be turned support there as well. USD, also got some room to the upside over there, where we expect this market to go and test that previous level of resistance. The market also gave us a nice W, came back. We had a lot of wicks over there, but we are trading at a good price. As we can see over here, the market had broken above that level of resistance, came back and tested it as support. If we do get a daily close above this level, then I expect that level to increase. Alternatively, if we don't, we could potentially just see the euro go back into this consolidation area that we can clearly see the market is busy moving in. Next up, we do have gold. Now, gold also has some clearance to the upside, which will be the 61.8 of the Fibonacci taken from the high to the low on the monthly time frame, which will be located right around this level over here, if I remember correctly. There we go. Now, gold still has some room to the upside to maneuver. Now, we're going to wait for this, not wait, but we can definitely expect gold to trade higher as well. Very important to keep in mind is that gold is currently trading at a very strong level of support, that is resistance. A clear break above resistance would then turn resistance into support, and then we can definitely start looking for longing opportunities in the market there as well. Guys, that is it from my side. I will keep you guys up to date if any news events. With regards to the news events, I want to say thank you for your time. Enjoy the rest of your new year, and as always, cheers for years.